Andrew Malcolm here from Auckland Investment Club and Mortgage HQ, and today we've got Michael Burge. You go by Mike, or you prefer Michael? You don't
Honestly,
really care.
I don't care. everyone asks me that.
I get Andrew all the time, and it's funny how it works out. But look, man, it's a privilege to have you here. Followed along on some of your journey over the last couple of years, and hung out a little bit socially over the last couple of months. I wanted to get you along and talk about your journey and what you've been learning, and it's some crazy times that we're living through at the moment.
It is interesting times, exciting times.
Yeah, and I love how you're sharing publicly a lot of the numbers and the journey, and trying not to hold back so people can learn about what it's like. And you know, why don't you describe yourself? You know, you're a self-confessed investor. You really dived into it.
Yeah, well, I think like a bit of my backstory, like initially I was in the fitness industry for like 12 years.
Yeah.
And then it wasn't until 2016 I started learning about real estate investing, and then sort of literally just learned off YouTube.
Yeah.
And then 2018 finally bought my first place once I left Auckland, and then got into investing and sort of went well. And yeah, ever since pretty much 2020, I've been helping people full time to build their portfolios one way or another.
Yeah.
So.
And through 2018 to 20, you bought 17 properties in that time, or was that?
It was 2000. So May 2018 was my first purchase.
Yeah.
I bought 5 in 18 months then to pre-COVID.
Yeah.
And then during the COVID period was when I bought 12.
Yeah.
And then literally your first for me to tell us, I've bought 2 recently.
Yeah.
So I've now got 19, but those 2 are still to settle in a couple of weeks.
Nice. That's what it's all about. You know, what I get stuck about sometimes is people talking about property investing, but they've stopped investing themselves, and that's easy to do, right? You know, you're trying to time the market, or you get to a certain point and then you level off. But the fact that you're still going it's an encouragement for other investors to say, hey, I still think it's a good time to buy.
100%. Like, as you know, like I help people full time and with building their portfolios, and I think I wanted to get into a position where I could still buy, because people sometimes are like, oh, why aren't you buying in this market, or are you still buying in this market? I'm like, well, if I could, I would. I just didn't have lending at the time, and now I've got lending, so I've started buying again.
Yeah.
I like those properties. I think they're going to be somewhere between 9.5 to 10.5, maybe a little bit higher % gross yield all in. So that's me, as you said, it mentioned about being very transparent with my numbers and what I own and when I bought it, and photos and before and afters and all that sort of stuff. I think it's important to be transparent, and if I'm telling people now's a good door, I think now is a good time to be buying, and I'm not buying it.
Yeah.
So yeah.
Well, you can always buy if you're willing to do creative finance as well, but I can understand you're trying to buy them that you own it and get cheap finance. If you can get the bank finance, then the numbers are a lot easier than if you're using private lending. Yeah.
100%. And as you'll know, I've been doing a lot of refinancing, as we just spoke about before we started.
Yeah.
Just to get a lot of the stuff that I did have at second tier lenders and third tier lenders to main bank.
Yeah.
Because obviously when you're trying to build a property portfolio, cash flow is obviously important.
Yeah.
And trying not to be stressed, especially in like a high interest rate environment. So yeah, just trying to get my debt all to main bank, and ideally keep it at main bank.
Yeah.
Obviously it makes life a hell of a lot easier.
Yeah. So what investment goals have you got for yourself? Do you write them down? Do you think about it? You got a big goal? Or?
I think originally I started out with just the goal of, like everyone has, financial freedom, building up enough of an asset base where you didn't have to stress. I think like through my childhood, money was generally an issue and generally something of is a stressful topic, as a lot of New Zealanders will probably experience. So I think having that made me not want to be like that, and not want to be like that quickly. So my initial goal actually was to be able to retire at 30. Yeah. I don't remember if I ever got to a point where I could. I think maybe at 31 I could probably kick back, but not like an extremely exaggerated. Not like an amazing life. But it was just like people talk about their not the magic number, the freedom number, and to me, I kind of got there. I think it was about 30, 31-ish. Obviously, it was no sort of amazing life, but it was just a matter of having enough passive income that could replace your expenses. Yeah. And then you can kind of start to go, okay, well, what do I actually want to do with my time? Yeah. So, In terms of gold now, I think something to just more keep me on the straight and narrow, to not do anything stupid, is probably, I don't know, and this is just an arbitrary number, I think 7-figure passive income at some point, like that kind of thing. But to be fair, I don't have a time frame. It's not like, by 40, I want that, by 50. Yeah. I think it's just something to have me, as I say, keep me on the straight and narrow. I've already got to a point where I'm more than comfortable, whether it's 17, 18, 19, I really don't care. Yep. It's more probably, it just keeps me progressing because I think once you've sorted yourself out, you kind of need something bigger or something to still keep you on the straight and narrow, because there's a lot of distraction in this world. So, yeah.
It certainly is. So you, your investment philosophies must have kind of evolved a bit over the years. How do you frame those philosophies for your clients or for yourself?
Investment philosophies in terms of just real estate investing or investments in general? Because I think with it, I'll happy to talk from a two perspective. One, in terms of my philosophies around investing just in general, when I looked at which asset classes would be worth putting money towards and how does it work. And then I'll touch on my philosophies around obviously real estate investing. So from the bigger picture, I always thought, and again, this is probably in my mid-20s, I was trying to learn, okay, you've got a business is obviously generally always number one. Like, if you want to be a billionaire, do it in business, basically. But then 90% of millionaires, I think, own real estate. So real estate's obviously a very, very good asset class to make good money in and passive income, whatever. So when I think of investing in assets, I think, okay, we got business, you've got real estate and all the different types of real estate. But you've also got stocks, crypto, gold, silver, things like that. I think so. My first philosophy or thought around that is, okay, well, business is higher risk, and usually business or your job is where you create your income, and then your income will be put into an assets like it generally, I think, should be a lower risk, lower to middle risk in terms of return. Yeah. But it should also have two things. One, or a couple of things at least. One, an upside for capital growth, and then two, an income. So a yield or a dividend or some kind of payment from owning it. So I look at things like obviously gold, silver, crypto, even stocks that don't really produce a dividend. And I'm like, to me, it's more of a speculative asset or a store of money for like gold and silver, whereas real estate is an asset where not only can it obviously go up in value, but you can also forcibly appreciate the asset, and then you can also obviously earn a rent or a yield, dividend, whatever you want to call it, from owning it as well. So I look at, that's my first thinking when I think asset. If I've got a bunch of money, I'm like, where can I have something where I could ideally forcibly appreciate the asset? Things like stocks, cryptos, you just can't really do that with, not legally.
No point in owning 0.00000%, 1% of something, right?
And that you like, I think that's one massive misconception of people that don't quite understand real estate and the power of it is, I have arguments online a lot with people. I don't think they quite understand the big complexities of real estate when it's quite a simple game. If there's $1 and a stock's $1, it's illegal to buy it for 90 cents if you know that it's about to go up inside of trading. Whereas real estate, it's encouraged to know that the house in front of you just sold for $1 million, and the one next to it, if you could buy it and it's the same spec, same thing, and you could buy it for 900, congratulations, you literally made 100 grand on the buy. Let's take that even a step further. Say that house next to it wasn't renovated and one down the street was worth 1.1 and you bought that one for 900, you spend 50K, all of a sudden you've got 150K views of equity in it. Like, you can't do that with so many asset classes. You can do it with business, you can do it with real estate. Outside of that, I'm like, and it can pay you to own it. So that's my first thing when I think asset classes. I think philosophies around investing. I want most of my money, probably 80 to 90% of my money, to go into assets that I can forcibly appreciate. It has a potential for capital growth, and it, more importantly, pays me to own it. Once I clear off that, then my thinking goes to, okay, cool. What are my philosophies? Like you asked, towards real estate investing, and those are those. Can it pay me an income? Am I buying something that's going to cost me to own? Because I would shift that into a column if it's a liability. Or can it either at least not cost me to own or ideally pay me to own? So that would put it into a quality asset or an income producing asset. So the first part would obviously be the income side. then it would be, can I buy it well, and can I add value to it? So just the real simple stuff that you guys probably teach, buying well. And it's crazy because it's so common sense to us.
Yeah.
Because I think as we try to educate people is you can buy stuff under value. You can still add value to it, even though the sky is falling and everything's going so terribly, apparently. And you can still, like my purchases, you can still buy stuff cash flow neutral, and I think mine are even going to be slightly cash flow positive at these current interest rates. So, those are pretty much the things: cash flow, value add, and
with the rates uncertainty, the cash flow is just so important. And buying commodities, metals, crypto, it's an element of speculation, and then depending on how much you allocate into it, then it's kind of like hedging.
100%, yeah.
But it's not the way that you're going to probably, on
most
balance
likely
of things, make
Correct.
the most money.
Correct, yeah, I agree.
And through assessing asset classes on their own merits, you often end up on property because of the time commitment being relatively low, the leveraged returns, and business is so risky and so time intensive. So
a lot of sweat equity that goes into it. So it's that's why I use the saying, like, if anyone out there wants to be a billionaire, you're probably 100%. You're going to have to. You probably have to do business. Yeah. If the average person wants to just be sweet in 10, 15, 20, 30 years, real estate. Like it's real estate, and then it's just then you pick real estate. Then it's like, okay, what's the most effective, productive way to get the most out of my money? And I think where my story is really good for that is I didn't have a shitload of money to start with. And I feel like I've done well with not much. And so I think I relate quite well in that way too. And I never had massive incomes either to most New Zealanders.
It's hard to make money as a PT.
Great. Yeah. I was literally working 7 days a week. Yeah. I moved from, as I said at the start, moved from Auckland down to Bethlehem, Tauranga, butcher it, and was working 5 days a week on a minimum wage. So I went backwards in income just so I could get PAYE, so I could buy within an hour to get my KiwiSaver out. Yeah. So I was working 5 days a week at a gym. Then I was driving Monday evenings back to Auckland, getting back to Auckland midnight, working PT and school athlete development stuff Tuesdays, Wednesdays, Thursday mornings, then driving back to work, starting Thursday afternoon in the gym, doing Thursday afternoon, Friday afternoon, Saturday, Sunday, Monday afternoon, driving back Monday. And I did that for like a year and a half. Yeah. So that was just to get the income up, to get the serviceability. So
that sacrifice worked, right? And makes you appreciate what you've got now even more.
100%. Yeah, for sure.
Yeah. And so I'm guessing the investment you're most proud of is the first one.
Yeah, I was talking to my brother about that, and in a way, I think it was because you have that, especially because this is 2018. Now it's normal for people to be a little bit more transparent with what they do, maybe some numbers and stuff on Facebook and Instagram. 2018, there wasn't really people doing that much, and for me to go from Auckland, leave the city, go buy in Rotorua of all places, Fordlands Rotorua of all places, where I was told by many a person, 1, don't buy in Rotorua, 2, don't buy in Fordlands, and certainly don't buy in the street I bought on. Yeah. To me to do those things, 1, learn, and then hope I was learning the right stuff, because I didn't pay someone to teach me. I'd learned it off YouTube, hoped I'd learn the right stuff, then moved, went down in income to get the serviceability to be able to get my KiwiSaver out to buy in this place that everyone was telling me, literally everyone was telling me not to do.
The worst place of the
100%. Don't buy in the worst street. Don't do this. Don't do that. Yeah. And
so how much did you pay for it?
$195.
And how much did you spend within a couple months of owning it?
I spent on the reno. It was $30,000, and I got $10,000 through like a what do they call it, heat swap scheme or whatever for the heat pump, and then free installation because it was a rough area. Yeah. So it was about 40. I paid 30, and then probably the next question to me, what was it worth after it's
what's it worth now?
At the peak, it ended up being worth $515. Yeah. It's, to be fair, it's probably lowish to mid fours ish, but apparently the bank had it valued at $490. So I'm. Yeah. I used that when I was doing my valuations.
Let's call it $450, right? So it's gone from your $240 in, it's gone up to 450, you've made 200 grand from that property in the last 6 years, and it's cash flowed.
It's paid me to own it every single day. Yeah,
right?
correct.
Yeah. And the work that you did, you probably added a lot of value to that property. You made it more livable.
Yeah, no, I did. Yeah, I literally recycled 100%. This was probably, you're right, probably the first deal, because the first deal was I'd learned about the Burge strategy. I'd learned about recycling equity. I'd learned about buying well, adding value, all that sort of stuff, all the fundamental things that we talk about and try to help people with. I vividly remember being at my mum's house, getting the first registered valuation sent back to me, not quite knowing what I had an amount in my head. I was like, oh yeah, if it's 260, 250, 260, it's kind of okay. It's like, it's decent. I didn't realize that how much it needed to come back to get 100% of the capital back. Yeah. And I remember getting the valuation, opening up, and you kind of first thing you do is like flick through to sort of see the number. Yeah. Because the only thing that's important. And it came 285. Yeah. And I was like, oh shit, like that's more than I expected. And then when I did the math around it, I was like, this is exactly to the dollar, pretty much 100% return on investment at the 20% deposit. I was like, fuck, I did it. Like like I was literally, it was like winning the lottery. Yeah. Because I was like, you'd learned something literally from people from Australia, people in America, people in Canada. Yeah. Move country, go buy again where people said not to, and then all of a sudden, like it worked. Like, so yeah, probably would be the first. That, and then also the second, because the first house I renovated over a 6-month period. So you could argue that some of it was capital growth, although even at that time the market was kind of flattish. It wasn't. It was still pre-COVID. The second house, I did the same thing, got 100% of my money back within 17 days. Yep. So that was really when I was like, I'm 100% onto something. Like, I know what I'm doing. Yep. It took out the element of capital growth or fluke or whatever. Did you do some
of the work yourself, like quite a bit of it, or not much?
Not really, man. I'm not a trader. Yeah. I feel bad.
Don't pretend like you're the big man, swing a hammer.
I think like maybe I'd sometimes help with like the demo and some of the painting outside of that, just because the easy stuff. So that's
kind of disrespectful to painters and demolition specialists, man.
Throwing shit around, pulling stuff out, throwing some paint around.
I could swing a sledgehammer.
That's pretty much me.
And you've bought a lot of properties since. What property did you wish you hadn't done?
Honestly, there is not one.
You stuck to your fundamentals?
Yeah, I did. In fact, to be fair, as of yesterday, I've got 2 more properties under contract, and neither of them suit my fundamentals. And I know part of me is buying them because it gets me to 20 and 21, and I'm probably going to pull out of them due to finance and other things. So. Yeah, every single deal, like I'm being very genuine with this, every single deal I look at, like my first, the second, third, meth house with the fourth, that was like one of my best deals at the time. All of them I look at and I'm like, they all
undervalue, and then value add.
Yeah, and even like units that I bought, that the gross yield is extremely high and they cash flowed still, and they were still like buying things for like 170, spending like 15 grand, and they're renting for 380. Yeah. This was years ago now. They rent for 410. Yeah. So even those that are like more simple type purchases, they're still extremely good. Like, so that, there's not a one that I look and go, I bought that because of my ego, or the ones that I've got under the contract at the moment, I'm buying because of my ego.
Oh, think about it now.
I saw on the way here, I was like, if it was a 16th and 17th purchase, would I buy them? No, because it's 19 getting to 20 and then 21, because I know that puts me in, like, they do their percentages between 21 to 50. I'm like, oh, that'd be fucking cool. I'm like, hold on.
You've got
not undervalue. They still need reno. Yeah. I'm like, it's my ego here. So, yeah.
You already know the answer, man.
Yeah.
So what are your strategies for finding deals and negotiating on them?
Honestly, finding them trade me. I don't have any, like, sexy... magic pill, unfortunately.
Agents?
No. Let me think of one funny story, but I probably won't share on here. But just trade me, like just trade me, not being specific with what you're looking for. Yeah. Knowing, being able to calculate your usable equity, or having a good broker that knows your usable equity, knowing what you can look for and knowing what you could service, and knowing rules of thumb. Like, I teach people this, but like the rules of thumb to what to look for to quickly assess if a deal is even worth your time looking into. Quickly just scouring trade me, seeing what could potentially make sense, making a list of it, then calling, seeing what's available, seeing what kind of fits what I'm looking for, and then filtering from there, and then so honestly, nothing sexy when it comes to searching for deals.
Yeah. So we've had a big upswing in interest rates over the last few years. How did that impact your cash flow, and did you have to sell anything?
Yeah, so glad you asked this one. First answer, no. I've not had to sell anything, and obviously, as you now know, I've bought 2 more. So that's been cool. It's weird. Always in my head, I think, as people know, I'm 35, turning 36 soon. I think people around our age, we were probably lucky enough to be old enough to go through the 08-09 recession. And I think and I was, 18, 19 at the time. So I think what that taught me was shit can go sideways out of the blue. I remember getting made redundant. Pretty much everybody got made redundant. The business closed I was working for. Heaps of gyms were. And I think that sat in me to be like, okay, probably at the time fortunate because I didn't have any assets. That didn't lose anything. It was just kind of like, you lost your job, cool, move on. Whereas I think that put me in good stead for later on when it came to building an asset base, building the portfolio, keep these fundamentals in mind, have emergency funds. Yeah. Cash flow is extremely important, probably the most important thing. And so that when shit does hit the fan, when rates will go up eventually, you've got cash flow buffers. So yes, it's not great, but like, as I've recently posted on the property page, like I'm still cash flow positive across everything, even including the next 2 purchases at 6.62 to 6.99% interest rates. Yeah. So yeah, like I think that's a testament to like how I learned prior and the stuff that I teach. Like it's all just fundamental kind of I would say like common sense, but to me it's just common sense like stuff. Like have emergency funds, buy with good cash flow, good gross yields, all that sort of stuff. So
yeah, if you find the 1 in 1,000 properties, then it's easy to do it. If you're just buying whatever you find.
Yeah. And actually going back to even just talking about asset classes, because we said real estate, but that doesn't mean everything in real estate is an asset. Like land, to me, that's not even like, I mean, it's an asset if you want to call it that, but it's not an income producing asset. So it's a liability until you do something with it. So like, I'll never land bank. To me, I'll land bank on something that's got extra land that has a house on it that's paying me to own, but I'm not going to go buy land. And I'm sure there's a time and a place for it with you when you've got a massive portfolio.
It's a specialty.
Yeah. Or it's a piece when you've already got a lot of wealth and you can just park some money because, you know.
I know people worth 50 mil that have bought properties and then they bought land and they're like, oh shit, I regret.
100%. I remember hearing a story. I think it was someone owned a massive piece of land in Botany. I think it was Botany. You might have heard this, and it was some guy who ended up passing away like 87 or something. But he bought a section of land, or it was probably a massive section of land, probably 40 years ago, 50 years ago. He ended up passing away, but it was worth like $18 million, and there was like this big deal about it that he bought it for like $30. Yeah. Now, but unfortunately he's dead. Yeah, he didn't have
no income from it for the whole.
Correct, like so. But I think people look at like that and go, oh, so I got to buy land. I got a land bank. It's like, no, buy assets that produce income. Yeah. Make your life better as soon as possible.
Well, if you buy a property that has land, you are land banking.
No, correct.
You're asset banking.
Correct. Buy something that like holds itself, and then there's additional value add later on. You know, like
it's one of the reasons we just really don't promote buying new builds.
Oh, you started
small plots of land.
Yeah.
And you're paying full prices if the land was like 5 times bigger than it is.
Correct. So, and again, going to that again, we said real estate's an asset class, and this is probably where people need to say that people that are starting out need to pick their asset class first. Yeah. And if it's going to be real estate, sweet. If it's going to be stocks, sweet. Like there's heaps of ways to make money, but in real estate, is it going to be commercial? Is it going to be retail? Is it going to be industrial? Is it going to be residential? Yeah. Then if you're picking residential, people need to understand land, new build, existing, why, pros, cons. And to me, when I did my seminar, I kind of took the piss out of this because I compared new builds to crypto and which one would I choose. And I think I ended up choosing the crypto because at least it wouldn't cost me cash flow wise to own it, and it still has the ability to go up in value. Which is interesting because I'm a real estate guy. Yeah. But if you're buying something that you can't buy under value, you can't forcibly appreciate, and it's losing you money from day one.
Yeah. And you got to think about when you buy something, can you sell it? And who wants to buy a not new build? Not many people.
True. Yeah.
Right? And so that's what's happening right now. There's a lot of properties that were new builds 3 to 5 years ago that are on the market.
Competing with new build.
Yeah, competing with new build.
Yeah.
And the tax advantages and the low deposit advantages are gone. And that new build property is now 5 years old. Now it's a bit worn in. Yeah, so it's worth less than you paid.
Yeah, it's funny because a lot of people, so many things I could go on with this, but a lot of people say, but there's no maintenance. And to a point, there's true, but I counter that with saying, well, there's also no cash flow. And by the time there's cash flow, you're probably going to have maintenance issues. Yeah. So it's like, there's something else I was going to say with that. Obviously, as you know, I coach people. Probably 25% of the people I speak with that want help are people who bought new build property with low interest rate. You probably get this all the time as a broker. And they come to you with usually 2 houses, the owner occupied in a new build, or 2 new builds, or whatever it might be, sometimes 3 if they were lucky, or maybe actually unfortunately lucky. Yeah. And they're stuck. And they're like, why do you have 19, 17? Why does your broker have 20? How have you helped this client buy a house and then get 3 or 4 rentals in 3 months? Yeah. And I'm like,
because we're not buying new builds.
Like you don't want to be rude, but it's
the problem is that one of the challenges, despite the benefits, the pros and cons of the build of that property type, is the incentive for selling new builds is so massive. The financial advisors and the real estate agents are getting huge commissions when they sell new build properties. And they can make it look so fantastic. So sexy, like the best ideas, spreadsheets look amazing. The marketing's amazing.
5% capital
they
growth.
Got all of the top economists on their shows. It's like you get suckered into it. Yeah. And then you buy a new build for $1 million, and 2 or 3 years later, it's worth $700,000. And it's
you've been losing money been losing money since day one.
Tell me, what's your outlook for interest rates and property investment over the next few years?
So, first of all, I would say I'm excited. I'm 100% excited. I think, and obviously I'm not a financial advisor. This is certainly not financial advice. It's just my own personal belief. And no, I'm not an old man that's been around for many ups and downs. This is just me spitballing as to what I think is most likely to happen. So I think, first of all, I think we're at the peak of interest rates. Now, this is obviously outside of World War III happening or something. COVID, something crazy happening again. This is a thing. Most things stay somewhat normal. Yeah. I think I would like to think I've got a pretty decent-ish understanding of the fiat system, the debt system that we live in as a society, and it's obviously how it stimulates the economy. So my outlook is, look, we're at the peak of rates. We were at the peak of rates. We're not even at the peak of rates now. They've come down a little bit.
Yeah, they're coming down quickly. By looks of it.
Correct. Yeah, last couple of days, and so. What I think is most likely, if I was, and I'm not a betting man, I would be putting money on next year rates will be lower. Yeah. The year after the rates will be lower. 5 years time rates will be lower. I think in 10 years time we'll probably be back into the 2s and 3s again.
Potentially, yeah.
And I think the reasoning as to why is because the interest rates are just there as one of the few really. Tools to manipulate the economy. So we obviously had the inflation problem. We're probably 75 to 90% of fixed-ish. The next time we get inflation data updated, I think it's past the next OCR. So it will probably be, and again, my rough prediction, will probably be November that it gets put down. Whether it's 0.25 or 0.5, whatever it might be. I personally, and I know a lot of people are, why would he want prices to come down further? Personally, if it were me, I would be more than happy if the OCR stayed at 5.5 till February. Yeah. I don't think there's a hope in hell it stays 5.5 past February, but I would kind of like it to, because from an investment point of view and helping clients' point of view, yes, I understand that there's people stressed and I get it, but in terms of the long-term ability of sustained house pricing and investing, the fact that house pricing is coming down, I think is a great thing. Yeah. Yields are up, which goes into the next part of the question. Like with the yields are up, and I think it's people who, dare I say, weren't that prepared have to. You kind of cleans out stuff, and you get a chance to start again.
People that were over leveraged, have to sell.
Which apparently was me, but I'm still in agreement or whatever. So, but yes, no, correct, and obviously it's not great. Like, it's the natural cycle of things. People learn and then they go into, and they do whatever. So I think we've seen kind of the peak of yields in terms of return. That will slowly come down as interest rates come down, because as debt gets cheaper, people will pay more for property, and then the return won't be quite as good in terms of yield.
Yeah, that's right.
In terms of a yield basis. So, next 5-10 years, to try sum it up, rates will slowly come down, maybe at least initially, probably quickly come down because we need to get the economy moving again.
Yeah.
Then after that, we'll probably go through like a flattish phase where it's slowly eked down. Yields will come down because of that. And then we'll have another event.
Yeah, well, there'll be
another reset.
There'll be another property boom, right?
Yeah.
Prices,
Yeah, and that's why I say I'm excited. Like, I can't think of a more. I have to be careful, like I suppose saying that, but again, I'm not a financial advisor. But I think what a perfect time to be buying or to be starting now.
Yeah.
Prices are lower than they've been for several years. Interest rates are almost 100% down and coming down, and probably coming down for the next foreseeable future.
Yeah.
And yields are high. Like, what a brilliant time to be buying. So there's still stressed sellers.
Yeah.
You get stressed sellers mixed in with cash flow that's going to get better.
Yeah. It's a great time to buy.
Well, 100%. How is it not? And then I know there's people who go, oh, prices are going to drop still over the next 6 months. Yeah, but if you apply smart fundamentals of buying under value and adding value, if you create a 20-25% gap and it drops 5%, 10%, who gives a shit?
Yeah, and it's a 10 to 20 year plan, right? So,
Exactly. Yeah. So, you've probably seen me argue with people on social media.
I don't look at that.
I shouldn't, but I don't know, I probably have too much time. But I think most people look at real estate the way they look at a stock, and they go, well, this stock's $100. I'm putting $100 into the stock, and it lost 5% value. Now it's worth $95. Yeah. Well, this is the brilliant thing about real estate is real estate's not a stock. This house can be worth, as I said before, it can be worth $100,000. You buy it for $80,000 because you're an amazing negotiator. And all of a sudden with a reno, it's worth $120,000. Yeah. Oh, the market drops 5%, was worth 110, 50, whatever. Yeah. Who cares? You still have an equity buffer.
Yeah.
And because you're smart and you knew how to bought for cash flow, it covers itself.
Yeah.
While rates are 6.5%. And when they go to 6, you're all of a sudden go, oh shit, I've got some income. Yeah. And when it goes to 5.5 and 5, you're going, damn, I'm glad I bought when we said to buy because it's an amazing time, So yeah, I personally don't see how people don't see it like that, to be honest. But again, who knows? But that's my way of thinking. Like, I can't wait for in 2-3 years when rates are like 4 something, maybe high 3s, maybe low 5s, whatever. And my cash flow's like, oh yeah, I'm good. And that was the worst.
Prices up too.
No, correct. And I was like, and that's my downturn. Yeah. That's the worst it ever got. I didn't have to sell. I bought more, and my cash flow's getting better by the month or by the 6 month refund.
Yeah, man.
Yeah. So. I could be miles wrong, but
so you coach on what's your website?
StraightUpPropertyInvesting.co.nz.
Yeah, and you're a good follow on Facebook, right? That's in Instagram. That's where you post the most.
Mike Burge on Instagram, but I'm not a great Instagram. I'm not a great social media person, but
you post on your You've got a property page on Facebook, right? Or do you post?
Yeah, we've got a Straight Up property investing page. We've got obviously my normal Michael Burge Facebook is probably put most of my personal stuff on there. My personal page is basically a business page. Yeah. I do have my Instagram, Mike Burge, but just chuck stuff wherever. So
all right. So thanks, Mike, for coming along, and we're going to learn more about some of his property deals in future podcasts. And I'm pretty sure you're going to answer questions as they come to you on the socials if they do. If you want to see the numbers from his refinancing, it's on his social pages and
it's on it's on both my Instagram and personal. So personal Instagram and personal Facebook page, and also it's on the Property Investors page. Before it gets taken down for people commenting.
Yeah, too much. Yeah. Anything else you want to add, man?
No, this has been great. Obviously, it's my first time doing a podcast. So
yeah. I mean, I
couldn't have done it with a better person.
I love the passion, and you hang out with other investors. You talk about investing all day, every day, and you help other people investing. So it's like, I want to be around people that
like-minded people
building a big portfolio. And I'm passionate about property as much as many people, but I'm doing a lot more in the business space. So I love to see what the other side's doing as well.
Yeah,
Man.
yeah. It's been good.
Sweet.